Yes, it's working. All right. Well, as Ramzia said, I've been with NVP for quite some time. I've also been to quite a few CFA VBA events in the past, in the first half of when I was at NVP. So I'm quite honored to be in that role of notable speakers with this relaunch of the Private Equity Committee. Yeah. Well, I do the two things at NVP. I'm the Director of Research, and I coordinate policy lobbying on regulatory, fiscal, and legal affairs. And for the research, I coordinate our research program together with Invest Europe and all our other international partners in Europe. Every country has its own private equity association, and we share this data collection platform with them. But first, let me tell you something about. How does that work? Oh, no. Yes. Yeah, the next slide. Yes, that works. Let me tell you something about NVP. We were founded in 1984 to be there's somebody on the line, maybe. Everybody mute, please.
Violet, I think Violet has not got her mute on. So, there we go. Good.
Yeah, thank you. Thank you. Our chair is Elmira Jorritsma. She is a former deputy prime minister in the purple cabinets of the 1990s. Our staff is 9 people, 7 full-time equivalents. We have about 101 members, which is a fair increase we've seen in the last couple of years. About 40% of our members are venture capitalists. About 55% are PE firms, ranging from the largest international buyout firms to very regional SME investors. We also have a few fund of funds as members. Next to that, we also have 90 associated members who are advisors on all kinds of parts of the investment process. We estimate that we have about 90% of the available private equity and venture capital available in the Netherlands amongst our membership. What we do can be divided in, say, 4 categories. Lobbying is really the first and foremost thing that we are there for. We lobby the government in The Hague, but also in Brussels for better regulation, but also when there is a public debate about private equity, that now and then it flares up that well, there is something about private equity in the media, and then we're the first to react to that. Even this morning there was an article in the FD newspaper about some tax-related issues that we wrote a consultation paper on, and which impacts private equity, but also pension funds. Research I'll be talking about later on today, mostly with the numbers that we collected. And training and professional standards. We have an extensive training program, and we also develop professional standards in together with our code of conduct. The code of conduct is our code of conduct is 5-6 points together with 120 pages of best practices. I'll go into that a little bit later. And we have webinars, all kinds of events that are tailored specifically for private equity and venture capital professions. And also entrepreneurs, investors, press, students, everybody who wants to know a little bit about private equity, then we're the first point of contact for that. Our code of conduct, which we've had since 1986, at least the Dutch version, is bundled with 100+ pages of best practices of how to run your fund, how to interact with LPs, investors in your fund, investee companies, portfolio companies, but also integrate ESG practices or other, well, you can name it actually. They're all sort of derived from these 6 points of how to be a good private equity venture capital investor. Act with integrity, keep your promises, disclose conflicts of interest, act in fairness, maintain confidentiality, and do no harm to the industry. And in Dutch, we have a similar one. But for the English version, this is the Invest Europe version that we use. Next point on the agenda, I will have some go into what is PE and VC actually, and that might seem sort of a trivial question, but there are so many definitions out there and so many, well, misunderstandings even sometimes, that it might be thought it would be useful to have a look at that. Next point on the agenda is European private equity and VC in some key statistics. Then I will dive into the Dutch market, and then we'll have the Q&A. First of all, what is private equity and venture capital? Well, in a nutshell, that are, of course, equity capital for non-listed companies. In our numbers that we collect, we thus exclude private equity categories like real estate and infrastructure. We might start collecting infrastructure information in the future because they're very closely related to investments in, say, operational companies, but we're not there yet. Usually there's a majority interest or a considerable minority interest. Interests are held for a period of 3 to 7 years on average. There's active shareholdership, active engagement with the companies through their shareholder agreement. There's specialization very often in certain financing phases. And that might surprise a few people that investments really start from, say, 250, 500K and up. Really the majority of investment activity is really in the below SME market, which I will go into later. And organizations are return-driven, professional, and usually, but certainly not always, if you look at our membership, quite a few members are organized in a different way, but the vast majority are organized in closed-end funds with LP-GP relationship structures. At least in Europe, we really distinguish private equity from venture capital. In the United States, it's very often said that venture capital is a subset of private equity, but in Europe, it's more common to say venture capital is a financing phase that focuses on early stage, immature companies and private equity in more mature companies. There's this in-between category that we call growth capital, where you add equity capital to a rapidly expanding but fairly mature company that falls sort of in between. The financing phase that comes before venture capital, that's very often the 3 Fs, friends, family, and fools, government subsidies, business angels, crowdfunding, etc. And that's the end of nice graph, I think. A fund structure, in short, about 15 to 50 LPs, investors, together with a GP, form a fund that invests in 10 to 15 portfolio companies, and which are sold on average after 3 to 7 years. And all the returns flow to the LP, and if there's sort of an excess return, that flows back to the fund manager also, GP, in a so-called carried interest arrangement. And what does a PE firm actually do? Well, except for providing share capital, there's very active engagement with the portfolio company. There is strategic, financial, fiscal, legal expertise that really helps to bring this company forward and achieve the growth objective that they have of that company. Very often they're represented in the supervisory board, Raad van Commissarissen in the Dutch context, or some other thing. And as an active shareholder, you have influence on the strategy, but also the M&A activity, the financing structure, and the composition of the management team of a company. So that's far more than you would normally have when you are even an active investor on listed companies. Let's dive into some key statistics then. European PE and VC. I've taken a bit of a longer timeline that is maybe usual, that you might usually see. This is from 1989 until now. The amount that was raised in new PE and VC funds from LPs, from investors, pension funds, and insurers and the like. Now, what I like about this picture is it really shows how young this industry still is. Well, the investment amount is less than 10 billion was invested for, well, let's see, until 1996, I think. And then it just took off enormously. But it's only these two peaks between 05 and 08, and that's relatively recent that we have this new peak again. But if you average it out, it's one big line upwards. And before 89, there really wasn't, well, it just goes down even further, and there's really not much of an industry before that. I think the highest that was ever raised was in 2019 on a European scale. 114 billion of new capital was raised from investors. And if we have a sort of a shorter time period here, we can see how this is divided between the various strategies within private equity and venture capital. You see that the vast majority of capital was raised for buyout funds. Last year it was 62 billion compared to 15.5 billion of venture capital. And then we have another 15 billion of growth capital and some other, well, generalist funds that have mixed strategies or mezzanine funds. And this pattern repeats itself quite much of the time period. Although it's very remarkable, I must say, that the amount that was raised for venture capital, but also growth capital, has really steadily increased over the years, where it is really becoming a more mature asset class right now. And if we look at what geographies in Europe, I say the most active, most important markets for private equity, and it's really the UK and Ireland that constitute almost the half of the European private equity and venture capital market by fundraising. France and Benelux are a good second, and then DACH regions and Nordics follow on a, well, far behind actually. Now, when we look at what kind of investors are interested in PE and VC, this is the whole, taken as a whole, PE and VC fundraising. And here we see that pension funds, fund of funds, insurance companies, all kinds of institutional investors really are the mainstay of venture capital fund, PE and VC fundraising. Some other categories are really at the bottom. If we go a bit further, banks used to be a very large provider of PE and VC capital, but that really has declined over the years, and that's partly also due to regulation, the various Basel implementations, for instance. The picture looks quite different when we look at VC alone. Here we see that the government is one of the biggest sponsors of the European VC landscape. The objective of this is to crowd in investors, private investors. That is slowly also starting to happen. The top line is government agencies. And in the European context, think of the European Investment Fund, which is really an important investor in this space. On a national scale, in the Netherlands, we have InvestNL, but also the regional development funds. They're important in this. And what is also remarkable is that high net worth individuals and family offices play a far larger role in this, financing this particular strategy. Corporates also. The growth of corporates in this sense is also interesting because very often they use VC to have a look at what is actually happening in their space, in their particular area that they are with, but they want to see the deal flow of the VC. They're interested in what kind of technology they encounter. So maybe less of a financial driven incentive to invest in VC for them. Well, we look at where does this come from? Where does this all come from? It's interesting to see that where the LPs come from that invest in these European funds. A quarter of them comes from North America. So we're also importing a lot of capital. Quite a lot of capital also comes from Australasia. And well, a quarter of the other capital is, for instance, from France and Benelux. So that's from a domestic market, as you could say. Armiel, is that a question you would like to ask now, or I saw something on the chat popping up, or
it could be nice to.
I'm wondering, Felix, if you think that, let's say, fundraising trends in the US and Asia Pac are comparable to Europe, or do you think that, let's say, private markets are more important there compared to Europe? I'm interested in learning a little bit more about that, if you can elaborate on that, of course.
I would say that the US is fairly similar in that, and just that it's you add 10 years to the timeline. The private market has been developed there at least 10 years earlier, and I think Australia and Asia is a little bit behind. So we're a nice second place in that, I think, and also in the sophistication of the markets. Yeah. Let's see. I think we see this is how that capital was allocated, deployed into companies, and here you see sort of the same pattern, except for two bumps, which we're in. One of them we're in right now, and the other one 10, 12 years ago. But in general, it's big line upwards. Really a development of a private capital market. This is a sort of a more information on one graph, a shorter time period to get an idea of how many companies every year receive the funding. Last year, 5,000 European companies received some sort of venture capital funding. Well, on average, 2,000 companies received some sort of growth capital equity, and 1,100 and 1,000 on average over the years received a buyout from a private equity firm. And this is a nice way to see also that there's a lot of small investments going on in venture, and a few very large investments going on in buyout, because on the bottom one you see the amounts that are allocated to buyout and venture capital. 5,000 companies received 12 billion, and 60 billion was allocated to 1,100 companies. But this is also sort of a last year snapshot. How much money went to which kind of strategy in the last year? So of all the money that was invested in European companies, almost 70% went into buyout, but that represented only 14%. And the vast majority of the number of companies that went to startups. But maybe not surprising, but I think nice to highlight. What is maybe a bit more surprising is that when we look at buyouts specifically, that it really is a SME market. The top dark gray line shows the number of small investments, meaning equity tickets of less than 15 million into companies. And that was last year, 759 companies received such a small investment, whereas it represented only $3.7 billion euros, and only 36 companies in the so-called mega buyout transactions of more than 300 million of equity, mind you, these are the numbers of the amounts of equity that were allocated from the VCPE funds. So if you add on debt or other kinds of amounts, you have the transaction amount that's usually bigger. But this is what was allocated from the private equity funds. But then you see that those 36 mega transactions together had 34 billion of equity together, which is almost half the market. But that sort of distorts what you might think of what the market looks like. Having a look at what kind of sectors are invested in, then you see in well, if you just look at buyout, it's a very diverse picture. On the bottom left, it's all kinds of sectors, and it can be, well, very mixed from year to year, and this is also very broad sectors, but you see that ICT is always an interesting place to invest in. Consumer goods and services, business products and services, and healthcare, actually, also a very interesting space to be invested in for a buyout. When we look at the top right, though, and when we look at venture capital, we see that biotech and healthcare takes up a far larger share. And that is mostly because of the high number of biotech investments that we see in Europe. The Netherlands is also a good example of that. The life science and biotech investments, you see a little bit less in buyout. Those are more healthcare related investments. And of course, ICT in venture is a very popular sector. Having a look at where does the Netherlands stand in Europe, if we take PE and VC investments as a percentage of GDP, then, well, surprisingly, we are a very developed market in Europe. Maybe we could say that Luxembourg is more of a fund domicile country. So if we take them out, the Netherlands is actually the third market in Europe for private equity and venture capital, which, well, considering the number of inhabitants we have here, 17 million, it's quite surprising that we have such a developed market, and it's something to be proud of, I think. Countries like Italy, 60 million inhabitants, Germany also, even in absolute numbers, are sometimes lagging behind the Netherlands. I can now go into some more detail about Dutch private equity and venture capital. Some numbers in short. We have about 2,200 companies in the country that employ about 380,000 people. Coincidentally, that is quite evenly divided between companies held by a venture capitalist and companies with a private equity shareholder. There are some very well-known names amongst these examples. Some of them have been in portfolio for a very long time. Some of them have had multiple private equity venture capital investors. For instance, Rompot is a good example of that. And there's a variation of foreign private equity owning Dutch companies and Dutch private equity venture capital owning Dutch companies. And we've also seen a few recent unicorns, like Molly, the payments company, but also MessageBird, which is a communications platform. Shall we maybe have a look at that question?
Yes, great. Yerson Rodriguez, do you want to read it out yourself, or should I read it? Up to you. You have 5 seconds.
Yeah, sure. Yeah, I'm just wondering if there is a particular reason for the Netherlands to be at the top of that list. Is it regulatory advantages or tax advantages compared to the other countries, perhaps?
I think good tax arrangements are definitely a part of it, and we've had those for a very long time already. I think the main reason for it is that we have all the key ingredients that make a private equity venture capital climate attractive here. We have entrepreneurs who are business-minded and open to outside investors. For instance, in Germany, that is very often a lot less the case. The German Mittelstand, if you talk to them about maybe a private equity investor, then it's really hesitant very often. Whereas in the Netherlands, we already for quite a long time we've had this attitude that it's well, if it grows the business, and maybe it's a good opportunity to have. Next to that, we have large institutional investors in the Netherlands, pension funds, especially, and that combination has already in the 1980s made the Netherlands one of the more advanced private equity countries. So it's a combination of culture and also institutional makeup of the Netherlands, I would say. Yeah, these are some of the examples we have. And let's have a look at the fundraising of Dutch buyout funds. You have to read this like from the bottom one, 07, to the top, 020. And then what we see is actually a fairly the picture differs quite a lot per year, and that's because we in the Netherlands have quite a few very large buyout funds that don't go fundraising every year. Examples of that are Gilde Buyout, but also Waterland Private Equity. And when they raise a fund, of course, the total amount is a lot larger. You see that in 018, but when there was not much fundraising, and in 2013. But in general, you can see that there's really an upward trend also in the amount of funds raised. And you see that also when a lot of these funds get bigger and bigger over the years. The majority of funding comes from institutional investors, fund of funds, and other asset managers, pension funds. Picture looks very different for growth capital fundraising, which is still a sort of a underdeveloped category, I would say. It's the amounts differ quite a lot per year. It's also really relatively modest. I mean, the largest amount ever raised was 450 million in 2017. And there are also quite a few years when there was nothing raised, like in 2012 and 2007. I think we had a board meeting about that yesterday. If we want to help scale all those very nice startups and other companies we have in the Netherlands, we really need to increase this category of funds to really help them make that last push as a scale up to become very dominating companies in their sectors. Look at the venture capital fundraising. That is also actually a quite remarkable picture, because last year was a record amount of 1.7 billion raised by Dutch VCs, and it looks like this is like the end of a journey that has only gone up since 2008. It's a very successful fundraising history of the Dutch VC sector. That is partly also because of large government allocations. The dark orange parts, like these and these, are government allocations. Those are quite sizable. On average, it's like 23 to 25, about 25%. But you don't really see that increase over the year. So it's always like this quarter of total fundraising is from the government, but the total fundraising is increasing quite a lot. So that might indicate that there's this crowding in effect, that the government actually enables private investors to invest in these venture capital funds, which is exactly what the government intends with this policy. I think, yeah, this is a quite nice picture. And when we look at what kind of companies is invested, this is the whole sector, private equity and VC together. There is quite of a diverse picture. Amounts can be very large in 1 year and somewhat smaller in the next year. Very dependent on certain very large transactions. For instance, AkzoNobel sold one of their chemicals company, Nourion, that was, I think, 11 billion transaction value. So that really, in still a relatively small market like the Netherlands, that really impacts the numbers. On the other hand, this is the amount of companies. This is a more straightforward picture. Here you see how many companies was invested in, and then you see that ICT really is almost I would say bread and butter of investments, the base interest. Next to that, consumer goods and services, and business products and services. But when we look at venture capital investments, then this is really a different picture again. And we've seen that on the European scale, but I think the Netherlands is an especially good example of that we have a really good specialization in life sciences companies and technology. Leiden University, but this whole cluster around it, and also other university towns have really flourished in the last couple of years, and also venture capital funds have specialized and have been very good at that. Also, Crucel is already an older company that has really successfully managed to spin out a lot of other companies where investments were made by venture capitalists that have been successful, and people from those companies started their own venture capital funds, and you create this whole ecosystem of investments. I think there was a question on the chat, Sam. I didn't really see it.
There is. Berg, would you like to answer? It's a good question, actually. It's a very interesting one.
Yes,
Berg,
please.
yes.
So Felix, I was just wondering, given the example of the US, if they are front running, how will the percentages represented by venture capital and growth evolve in the next 10 years? What's your intuition about that?
My intuition is you see so many good technology firms requiring capital, and I think we will see this continuing growth in that sector. There is the private capital market is still developing, and there is not really an alternative to equity financing for these companies. A bank and credit probably will not solve it. So my projection is that this will keep on growing. Yeah.
Thank you.
You're welcome. And let me see what I have here. And here the picture about where venture capital investments concentrate is even more poignant. It's IT, but the dark gray part on the right hand, that is the number of biotech and healthcare investments. And that's been very large always. And ICT, it can be a very broad range of investments. Interesting is also that the number of energy and environment investments is picking up. So that might be a good sign, considering the energy transition we have to do. And also financial and insurance activities, like fintech companies are receiving a lot more investments. Those are the dark orange investments over here. Well, I've tried to keep to the time, I think. So I hope that was clear. And please let me know if you have any questions. There was a question from Camille.
Yes. Camille, would you like to read it out yourself?
Yeah, sure. Good morning, and thank you very much for this great overview. My name is Camille de Vries from Wellington Management, and I was wondering that despite the growth of VC, a large number of Dutch institutional investors like pension funds still appear to lean towards more traditional buyout strategy.
Yeah.
What do you feel is the reason for this, Felix? Thank you.
Well, in the past, European venture capital and Dutch venture capital had a bad reputation, and that is because probably a sort of a timing bad luck. It just started to take off just before the internet bubble, and then things crashed. And then when it really took off again, it was 2007, 2008. So a lot of reports will show you quite bad returns because of that. And I think a lot of pension funds still have that image in their head. But a lot of fund managers that are around now have actually survived those 3 cycles and can show you very nice returns. But and also it requires some sophistication. You need to have a private equity program, and to venture into venture. That requires some further knowledge about how this asset class behaves, and it is riskier than normal buyout, of course. So it requires a bit of.
Felix, maybe I can briefly add something from my own experience. My name is Dirk-Jan Beugelsdijk. I'm CFO of Gilde Healthcare. We are one of the larger venture and growth investors in the Netherlands in healthcare. And last year we raised a new fund, and there we really experienced also that these pension funds, which indeed tend to be a bit more conservative or traditional, are now looking differently. I think we also had, for example, a large British pension fund investing in our fund for the first time, and also a couple of Dutch ones that are really interested. In the end, it didn't materialize, but I think the interest we received last year was really different from the fundraisings before. So I do have the feeling now that also given the competitive landscape now in buyout, and also a couple of large successes, also driven by the IPO market, for example, now also pension funds more and more feel that they also need to look at venture and growth. But maybe there's also people from the audience who are working for a pension fund who can maybe add a bit on their experience here.
That's a great invitation. Before I'll go into Annika Minimus' question. If there's anyone from a pension fund which would like to make
maybe I can add something. Hans de Ruiter, pension fund TNO. I think what plays an important role also in this case is when you take the Dutch pension fund industry, at least, in general, the pension funds that do invest in private equity tend to be the bigger ones, is my feeling. We also invest heavily in it, but we are the smaller ones. But most of them are the bigger ones, and given their size, they have a preference simply for investing large chunks, and therefore you go to the buyout market. It's that simple. If you let's say if you are 100 billion or more, it's easier to do it in the buyout market than in the venture market. So I think that's also plays an important role. So if you want to have a more vibrant venture space also in the Netherlands, then you also need to attract maybe the smaller pension plans to do it. And I think that's that's a challenge at this point.
Yeah, definitely. But also the venture funds are really growing in size, so it's becoming easier to allocate larger chunks to that. But I recognize really much what you say. Yeah. Also, what Dirk-Jan says, by the way, in the late, say for 2021, you can already see a few more interest from pension funds in VC.
Yeah, what we're hearing from our LPs is that if they want to lean into things like sustainability and the SDGs, then you're automatically driven towards more late-stage growth and VC, because there is the real innovation happening in companies and technologies that are being developed. So sustainability could be another tailwind for VC, I think.
Yeah, I think so. Yeah, and COVID maybe, yeah, medicine development.
Great, great discussion.
Felix,
and-
this is Ad. May I raise a question? I fully agree with what Hans was saying, by the way, the famous matching problematic issue of size that you have to deploy versus the size of the funds themselves. So that questions may pop up. May you move into small cap as a derivative of private equity? But another phenomenon is the so-called SPACs. And there was a lot of discussion now in the newspapers as well. Is it regarded as a new phenomenon of private equity, or is it listed equities? Felix, how do you look at the new structure of SPACs, where a lot of debate is going on right now?
Yes.
But as a new phenomenon for us as investors, maybe is it interesting or not? What are the caveats?
It is certainly interesting, I would say. From a VC perspective, it is a very nice. It could be two things. It could be a very nice exit strategy to have an easier way to list your company, not having to worry about finding exactly the right window when to list, which could be very narrow, but an IPO is a very elaborate process. And with the SPAC, you can shortcut that a little bit. Also, it can be a very nice way of accessing capital that you otherwise wouldn't attract, maybe investors that you otherwise wouldn't see. There is a Dutch life sciences SPAC listed at Nasdaq, I believe, from LSP, and what I heard is that they attract investors that otherwise wouldn't invest in their VC fund. So you broaden the pool with that. And because they have a 30-year track record, they can spot interesting companies in Europe quite easily, and you can build on that. So if you combine all those elements, I think it's a great method probably. But of course, there are a lot of SPACs sponsored by football stars, celebrities, Instagram people, and always be a bit aware of what their investment screening capabilities are. And yeah, I think that's my opinion about it. I haven't seen that many like that in Europe, though. It's more in the US.
Great, thanks. So we'll move on to there's been some more questions coming in. Anneke Minima, would you like to read your question out?
Yes, thank you, Sam. So I'm CFO of a startup company in a biotech called Phasis, and backed up with by 3 private equity firms. I was wondering what your view is, Felix, on why Europe is more kind of risk averse, or why the private equity firms seem to be more risk averse than the US ones. Why is that, and will that continue, or will it harmonize over time, do you think?
If they're risk of, I'm not sure if they're really risk averse, but of course, for a long time, venture capital funds were smaller in Europe, so they had to be more efficient with their capital. So that's maybe why they were more picky. Yeah, I don't know if that's something I can answer.
Yeah, it's a tricky one, but for example, our company has like a kind of a competing company in the US, whereas we still are a startup, trying to get private equity interested. The same company in the same level, preclinical, or kind of at the beginning of the clinical, is there worth 1.2 billion, exactly the same stage. So there's definitely this kind of people are starting to jump on way earlier than it seems to be in Europe.
Yeah. I think that
Yeah.
also has to do with this is one big large market, but maybe I think Dirk-Jan, you want to say
Yeah,
something?
maybe I can add to that, and I agree with what Anneke is stating. I think indeed in the US there's a lot more funding available, and people are not afraid to go in big early and to really build something something big. And here in Europe, yeah, and that's also maybe the reason why for example now the IPO market in the US is so attractive also for European companies. So if you look at, for example, one of our companies, Lava Therapeutics, which went in from 4 years from a university startup to a listed company on the Nasdaq, for them Euronext was not even an option because also the investors are not too much interested in a preclinical stage company listing. But in the US this is possible, and they could raise $100 million. So yeah, I think we should also try to benefit from it, but indeed you need the US funding and the US market to grow so fast. That is also what I fully recognize.
Great, thank you. Yeah.
Fantastic. So then there's another question which is coming. Actually, I'd like to combine it with another question. Berg, do you want to make a comment? And then I have a question which I'd like to combine with it.
No, I just wanted to add something to the discussion very quickly. What might also be the case is that and I'm not an expert, but from my own personal experience, what I see is that US-based universities, some of the leading ones, they seem to be very entrepreneurial, and you see a lot of founders, finding money around their universities or from these networks. And I think the same is not happening in Europe. I might be wrong. I'm not an expert. That's what that's my intuition based on some of the experience.
That's very true, Berg. And also this phenomenon of university endowments that we don't really have in Europe. And these endowments invest very heavily in venture capital. So you almost automatically create this loop.
Yeah. Thanks, very interesting. Yeah.
But it's also interesting to see that we have now also a couple of tech companies that really did well, like Adyen. And also these founders are now creating a new ecosystem in the Netherlands with the money they made with the Adyen IPO, and they're now investing it themselves into startups. So I think that's also really great. And also what happened in Silicon Valley, I think also a couple of decades ago, but now it's happening here in the Netherlands.
Yeah, that's a good example. A few years ago, you had the PayPal mafia. All these founders that were got when PayPal was sold. They all started their own companies. Peter Thiel and I think Elon Musk. And then you also see that happening with a company like Adyen, which is really a success story.
Great. Felix, could I maybe ask you to stop sharing your screen, because I think we only see a few people. We just thanks very much.
Yeah, sorry.
Thanks very much. So I had another question coming in, and that is so that there are thanks to the overview, there's a lot of trends which we've seen that you've covered. One structural trend that we haven't seen perhaps is that of ESG, and is that becoming a rising theme within PE and venture capital? And is there a difference between PE and E and venture capital?
It's an absolute trend, and I've seen it come up when I started with MVP. People were still sort of discussing, I do double-sided copying, so I'm ESG compliant. It's almost unimaginable now. And of course, we have European legislation now coming up, or it's already there, the SFDR. And it is really a key part of the industry, and how that I don't really see much of a difference in VC and PE, except that of course PE tends to have a bit of a bigger organization, so that has consequences for how you can integrate ESG practices. Have a separate person responsible for ESG, or have very elaborate procedures.
Yeah, great. So if there's anyone in the audience which wants to make a comment on that, perhaps a fund manager or LP on ESG and P or VC, then I invite you now to add to the conversation, noting that we only have 4 minutes left. So, but if not, there is another question, and that is, thanks Felix for the presentation. We've seen a lot of investments data and fundraising data. Could you speak anything about the exit data?
We have, of course, exit data. I didn't elaborate on that because we record that at cost. So only the number of companies that are exited make sense, and then I had a make a choice on what to show you. The exit climate has been last year surprisingly not busy. Fewer companies were exited than we recorded ever since 2007. But of course, we have a lot of very successful exits to even a few IPOs and trade sales to strategic buyers. I think it's very frothy market in that way, and that will in this year we will see even more exits and also very successful exits.
Great, and I'm sure with the added increased fundraising in VC, some of that will feed through secondaries and then also
and also SPACs and yeah.
So I think we're pretty much out of time because we have 3 minutes to go. So unless anyone has a burning question, this is your last chance. But otherwise, we'll wrap up.
Just a very quick one.
Yes.
I missed out some of the presentation because I had another call and I had to take. Could you just give a quick overview on how Brexit might have impact the volumes in the Netherlands or in Europe in general?
We've seen very little of that until now, Brexit. So maybe it will come. It will impact supply lines or whatever. But the actual investing, I don't think there's much difference to be noticed. I mean, to raise a fund, you don't necessarily need to have this like European passport. AFMD passport, and to invest in a company, you definitely don't need to have a passport. So this just goes on and go on. Yeah.
Well, Felix, this was really great. Will you be circulating your slides afterwards?
Yes.
Fantastic. Thank you.
Yeah.
Great. And conscious of the time, we only have 1 minute left, so we should wrap up. So I'd just like to say thank you very much, Felix, for a very informative session. Also, fantastic
so much.
data that you discussed. Really appreciate it. Thank you all for joining, and also great questions and discussions. I think we can have a session on just some of those questions, actually, which is great. Felix, usually we would say, in a physical meeting, we would, get some kind of a present appreciation or token of appreciation. This is virtual, so I'm sorry.
Well, thank you. Thank you for that.
Virtual clap. We'll have to sort that out another time. Yeah, thanks. As I said, this is the first event of the relaunch of the PE and VC committee. Thanks to everyone who helped set it up. We encourage you to look at the website for more events being arranged by us. As Hans said, that we'll be actively organizing events from you from now on. If you have any other interesting topics that you'd like to be covered as well, please get in touch with the committee. Details are on the website. And with that, it is 11 o'clock. So I would like to thank all of you.